The news from last week and into this week has been quite amazing. We've seen articles coming out saying a 50% chance on a recession. So homeowners just like yourself thinking about selling in the next 12 months have been calling me and asking me, does this change anything? How does this impact our ability to sell our homes? So I pulled our armless data, the data that us realtors have. It's very, very intense data. It breaks down everything that we can see inside of the MLS. And I'm going to go over what that's telling us going forward. So the economic news is real. And so is the buyer activity for sellers who are positioned correctly in the real estate market today. So the question is about what should Maricopa City homeowners do about this environment when they have equity in their home? So this week we saw Liberation Day tariffs. It's a new tariff that's coming out to us on the announcement. We saw the stock market drop by 10% over a 2-day period. We have China's retaliation in the mix. We had the 50-50 recession call from Wall Street banks. So in short, it was a shock, a freeze, and a partial fall in the real estate market. The sellers who were priced correctly, this did not impact them at all. Their homes went under contract, they got sold. The ones that weren't, negative news is not helping them at all. My latest data from Armless, we have 333 active listings. When I look at active listings, I'm looking at HOA homes. I'm looking at resale homes, not new construction. I am not looking at 55 plus communities. I'm looking at the broadest group of homes that we have here in the city of Maricopa. 54.4% of those 333 homes have already taken price cuts. There's something magical with those 333s. $333,500 is currently our median price. Inventory went from 3.6 to 4.1 in 1 week. This data would say the real estate market is softening currently, not crashing. And the direction does matter. And here's a part that doesn't change no matter what the economic news is. The 30 homes that closed last month, they had a median of 32 days on market. And the 52 homes that did not sell, they have been on the market for 109 days and have roughly decreased in value by $26,000, just over $26,000. Home sellers listen clearly on this part. The rents have been softening. Rents have decreased by 3 to 8%. We already were looking at a gap between $600 and $800 difference for a first-time home buyer to come and purchase your home. Meaning, if your home was a rental, they would end up paying less by $600 to $800 less by renting the home, having no responsibility of the AC, the roof, the water heater, etc. They would just be renting it, and the homeowner investor would be responsible for those other parts of the deal. Now, on top of that, rents have been decreasing along with it. So what does that mean? You need to have your home positioned correctly on the real estate market to sell it. As a seller, you're either going to be selling it or you're not. In the future, you decide if you think it looks bright or it looks gloomy or if it looks neutral. The largest bank out there did walk back the 50-50 recession chance. The buyers who froze with the news in the first week of April, we saw the activity slow up. We're seeing that unthaw. They're getting back out there looking. So some really good news on that aspect too. The bottom line is, in today's real estate market, a seller needs to be ready to sell their home. That means the condition of the home, and I've gone over that in other videos. We need to get the condition correct. It doesn't have to be perfect. It needs to be correct. And I can go over that with you in person, say, do this, do that. You want to come and say, Hey, James, I want to haggle over the price. That's why I'm selling, James. I want to haggle. And my golly, if I can't get the deal I want, I'll just go ahead and wait. Hear that, seller? Good luck. Market where I'm seeing this massive appreciation coming our way. I personally think the real estate market is the last decade. We skyrocketed. And then we had 3% rates. And then the government decided, or the markets decided, along with actions of the government, to take those rates up near 7 to 8%. That's a very interesting dynamic to fix. We ended up creating a market where we have a ton of sellers with a ton of equity and low rates, even though, like I said in a prior video, recently we are seeing that the larger group of homeowners have higher than 6% rates. And the people who have less than 3% are the smaller group, not small, the smaller group, but it still impacts the market. So the part that it impacts is affordability for the first-time home buyers. So those buyers are really being picky on if they buy and what they buy. So a lot of our buyers may not be first-time home buyers, and it's a big pool we're missing. We may be dealing with some move-up buyers. So it'd be interesting to see if we have some investors in this market. I don't see too many of those. I do see some, not too many coming across to my listings. And winter visitors and so forth purchasing a home. Downsizers, if they own their home outright, we still are seeing that happen where they're saying, hey, I need to get into a smaller home for many different reasons. But someone who has a 3% rate, downsizing for a 6 point something rate, I'm really seeing that happen. So the